Okay, good morning everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, June 27th. Michael Boutros here with you this morning. Carlos, Horace, Karthik, Sarub, Ziad, great to see you guys all in the room. So there's a lot to cover, and there's some pretty nice moves, specifically in the Euro crosses. Obviously, Euro top performer so far in the session of 0.86% versus the dollar. But also versus the yen, Kiwi finally making that turn off support. So there's a lot to cover. On the menu for today, we'll start off with a look at the DXY. There is an interesting change in slope here, so we'll definitely want to take a look at the near-term price action there. Aussie dollar stretching higher, dollar yen, euro yen, and Kiwi dollar from last night. Obviously, dollar CAD, our favorite trade there. Aussie yen, we'll take a look at Euro Kiwi, like I said, with that turn, and gold. I don't know if Sandy's in the room with a nice call yesterday. You did see that rebound follow through into the U.S. trade session, kind of teetering out here. I still think you're at risk for a dump lower, but we'll take a look at gold. And finally, the euro dollar, obviously, just on the back of what we're seeing here. Karthik says, good morning, all. Have a fabulous day. Cheers, Karthik. Love the positivity. Gold, silver for Sarub. Let me add silver to that list. For Sarub. Gotcha, buddy. All right. Okay, so let's jump into things. You got some commentary earlier today from Mario Draghi, a little bit more on the hawkish end, saying inflationary pressures are starting to pick up, or deflationary pressures, rather, are starting to subside. Growth is above average, and some of this hawkish commentary, some people are saying is fueling the euro rally. Whatever. At the end of the day, it's following through, and we're starting to see some of that price action materialize that we've been looking for. So a quick look real quick at the DXY and what's happening right now. So here's what the DXY looked like earlier in the week on the Sunday open. I just want to highlight this near-term slope. The focus region for us to start off the week was 96.96 key support and the low day close for the year. You had near-term resistance to 97.57, bearish invalidation, or really the breach to fuel the next upslope was 97.78. So it was this key range we were looking for the break. We're getting the downside break, okay? And certainly that's fueling a little bit more of a precipitous drop. Keep in mind also the monthly open is right here as well. So we're kind of making it through some critical zones, momentum, starting to approach former slope a trigger resistance. So I just want to kind of highlight that in the near term. But certainly a break of this region, you'd want to see acceleration and continuation lower. Here's what it looks like on the intraday charts now. Okay, there's that key zone of resistance we ran into last week on the daily chart, this former swing highs from last month. This is a nice former swing high from back in July of last year. Here's what it looks like on the intraday. And again, this is, let me zoom out a little quick. This is the 240-minute chart. All right, so the downside break of this confluence region, you want to see that acceleration, and that's what we're getting. So giving us a little bit more conviction to sort of trust this break. Keeps the focus lower, sub 97.10, same region. Initial weekly opening range low, former slope support. Now, for the sake of keeping things cleaner, there is a slope I was looking at this morning I want to present, but it's going to get kind of messy. So bear with me real quick. I just want to show you what this looks like. If we take it off the most recent low, high, you can see some decent slope, and that would highlight again that key region at 96.47 that we were targeting earlier in the month. We finally tagged it mid-month. That converges on the median line over the next few hours, right down here. Actually kind of into tomorrow morning, basically. Keep in mind, heading into tomorrow morning, you do have some pending home sales data in the United States. Nothing really big hits until the following day. We get the GDP release. This is the third release, excuse me, on first quarter data, so we're not expecting any revisions. Really, the big print comes on Friday. You get the PCE and core PCE, the personal consumption expenditure numbers, which of course is the Fed's preferred gauge of inflation. And those come on Friday right into the monthly close. Heading into next week, you got the monthly open with non-farm payrolls. So there's a lot of event risk on tap for the U.S. dollar. Long and short of it is, you want to stay bearish here, sub 97.10, 97.15. Again, downside targets unchanged. 97.69 would be a basic 764. And then that key longer term 618 now converges on this median line. So if we remove this, just to keep things kind of clean, basically that's what we're looking at right now. All right, so a possible slope that's in play. We haven't gotten too many sort of really strong reactions off it just yet, but it continues to further highlight that key 618 zone that we were looking for, 96.46, that we rebounded off of basically twice this month already. Key support still for the dollar index. Questions? From a trading standpoint, if you're holding shorts, this is kind of where I'd be bringing down my stop. If you're looking for fresh short exposure, not the place to start to look to get in yet. You'd need that recovery towards the low day close again, right back near 97, 96, 96. Or it actually might be a decent rebound play off of that median line if you do get down near 96.47 heading into tomorrow. All right, dollar index, going once, going twice. All right, that's number one. Number two, let's jump into the Aussie. Here's what Aussie looks like. So was the top performer yesterday. Nice little stretch higher. Here's the daily chart looks like. Kind of cleaned this up a little bit. Got rid of some old median lines that we were working with on the decline just to keep things a little bit clear. You know, I've been a little bit frustrated with this thing just because the pullback didn't quite get into the support I was looking for, and then it kind of just ripped without me. So I didn't get a chance to really get too much on the long side here. We're coming right off the median line today. So I wouldn't chase this from here. I'm again hoping to get a little bit of a reprieve to try to get back into this. But near term, I do think, I still think you're at risk. Here's what it looks like on the daily chart or on the intraday chart. Kind of went right into that target, 76.23. Is what I cited yesterday, guys, as the break you need to really fuel the next leg higher. That's the exact high we ran into. 76.24.2 was the exact high. So we kind of peaked right there, pulled back. Ideally, you'd get that run. I don't really think you'd get that magnitude, but if we do, that'd be sort of my ideal scenario. Top side break, you're still looking for 76.50, 76.76, a little bit bigger of a region of resistance. Just from a Fibonacci level, some former swing highs. But the focus right now for me, as far as new exposure, is trying to get back in on this, looking for a pullback. Again, here's what it looked like yesterday for Aussie. So 76.23, you want to stay constructive. Well, yesterday we said we want to stay constructive above 75.67, looking for a tag of 76.23. Now that we've made it, again, I don't want to necessarily press along from here. I need to see a little bit more of a substantiated pullback to jump in. Let's see if near-term price action offers anything of interest here. Yeah, so I mean, this could be a region. Again, that's former swing high. I was just looking at that. Basically, like 75.90 could be the first initial region. You'd start to look for a little bit of a support bounce if this is going to fuel a breakthrough 76.23. But if that gives out, I'd be looking for a move back into structural support here. Really nice slope. Hey, Sandy, I was just talking about you. I don't know if you missed it earlier. It says, and I don't know what to do anymore about my pound Oz short. We'll take a look at pound Oz. I've been kind of straying away from the pound crosses if you haven't noticed. So it, in actuality, you did see a nice little bump in overnight, kind of just following the euro. But I think there's just a little too much chop right now in the pound cross. We'll take a look at pound Oz in a moment. Any question here on Aussie? So I'm basically looking for a pullback, guys. I want to stay constructive above 75.60. Bullish in validation, you can raise now from 75.17 up into 75.34. It's basically the swing lows that we made last week, but that still 38.2 retracement holds true. We haven't made a new high yet, and that converges on the lower parallel. So I'm going to go ahead and bring up bullish in validation to that region. I want to stay constructive still above 75.60 near term. And again, looking for long entries, possible exhaustion at these two reference points. When we break higher, 76.50, 76.75, and I don't want to press it beyond that point for now. A 1618 off the low. You have former swing highs from back here in late March, a big pivot. So I'd be watching that as sort of a nice target on the upside if Aussie breaks. Right now, the immediate focus is on buying a pullback. If you're real near term, you could be playing this short, but I wouldn't necessarily want to try that. You're already too far off the highs here to try to get any type of reasonable risk to reward on the downside. All right, that's Aussie dollar. Number 2, any questions? Why don't we segue real quick, Sandy, to your question here on pound Oz, just because I don't really have anything material on the pound crosses, so I do want to see what pound Oz looks like. So with that, idea or notion of possible Aussie weakness to get long, pound Oz, is approaching some resistance here. So guys, this is the same setup that we've been following for a couple of weeks now. This is pound dollar, kind of just getting a focus on what's going on here. I love where we rebounded. As far as the recovery, you're coming into initial area of resistance and just a basic natural pivot in price. I'll bring your attention to the highs that you made back here in December, of last year. The pivot break here saw instant support once you broke through it in April of this year. Again, you saw some support there in May. The break saw instant resistance on the way up, and we're now tagging that region again. So sterling is coming into a near-term resistance level in and of itself. Pound Oz looks like this. And basically this thing we were talking about slipping below that lower median line parallel and it's been offering resistance ever since. You're now just contracting and squeezing. Yeah, so Sandy, this is still, in that key zone that we talked about last week. You're just kind of sticking right here. You got the 200-day moving average, 100-day moving average right down here. And then you have that former lower median line parallel, which is now resistance. And you've been in that range ever since. Now you're holding a short from 168, but does not really look good anymore. Yeah, let me see this near term. Let me see what it looks like. Yeah, I see what you're seeing. Yeah, there's a couple of things to be concerned about here. And just basics, when, like we always say, when you see these breaks, you kind of want to see acceleration. especially when it's a confluence break. So you had the 50% retracement, you had former swing highs like we were talking about, nice pivot in price, even on a channel support, just a mirror or a parallel of that high. Kind of gave you some stretches here, but even that kind of gave you a break, didn't really give you much fuel on the downside. And here we are with the recovery. All along the way, you were marking divergence into that low. Price action with a lower low, lower low, lower low, higher low, higher low. So the momentum profile seems to be turning. Yeah, I would say this is starting to look like it could see a little bit more of a recovery. You don't have the evidence for that just yet, Sandy. I think if you were to get an objective break of the weekly opening range, i.e. a break back above the median line, that would kind of like solidify it. So I don't know if you want to put a 50 pip stop out there or go break even at this point, but I would say that if it does take it through the opening range highs for the week, you do risk a larger recovery. In such a scenario, just a basic retracement would serve you kind of well. And if you do that, a 38.2 kind of takes you right back into that former pivot zone. That Fibonacci lineup is basically like 170. So there's a little bit more of a reason to be concerned. I would be. Even though sterling's coming into support, if you get that Aussie pullback, which I'm hoping we do, it might be a little bit more of a spill to the upside there for pound Aus before it turns. So hope that helps, Sandy, for pound Aussie. It's number 3. Sandy also has the Aussie at the weekly R2. Just another reason too. So I would go break even. Yeah, I mean, you know what? On a trade like that, Sandy, I'm very quick to go break even. I'd rather live to fight another day and reposition myself than kind of try to press it if the technicals are starting to turn against my my bias. So dollar yen, number 4. Here's what dollar yen looks like. It's been a slow trade, not really something I've been operating on. I've kind of just been waiting for either a rally into 112.25 or ideally I was hoping for the pullback into 110.75 again to get long. It's neither here nor there. You didn't get the 112.25 tag just yet, the overnight high 112.09. You're not, the pullback hasn't really done anything. So this is more of a wait and see kind of game, guys. There's a couple of yen crosses that look a little bit more appealing. We've been talking about Aussie yen. We've been talking about Euro yen, which was a ripperoo. But certainly for dollar yen, obviously the weakness you're seeing in the dollar is not really being very helpful here in trying to give this thing the upside thrust. So I'm going to take a little bit more of a side steep here for dollar yen. In general, levels remain unchanged. You're basically looking for either a breach through 112.25 to validate a larger breakout. Or like I said, if you get that spill towards 110.75, keep in mind the 200-day moving average is on the move. So that comes in now at 110.84. Okay. Whoops. Wrong one. Okay. Let me just raise that up a little bit. But just keep that in mind. This is basically the key zone of support on the daily chart. And this is just another slope I extended off the high here, guys, which converges on that former swing high. And again, right now you're testing the 100-day moving average. You're basically right there. So dollar yen is still caught in this catch-22 between 110.75, 112.25. It's the same zone we were looking at until the close of last week. Till that gives out, guys, I don't really have much of a play on dollar yen per se. The yen crosses do offer some opportunity, and again, number 5, euro yen, I think is where you'll get a little bit more juice out of this. Any questions on dollar yen? Big reactor to US data. I'm going to save this, and hopefully we'll get into one of these key zones as you get into the PCE inflation data that you get on Friday. But, technically, guys, this break is a move through the monthly opening range highs. So I do want to remain constructive. It's just, I can't get bullish at the monthly high. I can't, buy here. There's nowhere to really put an objective stop. So let's see if we can get a reaction through 12.25 or the pullback into 10.75. Dollar yen. Number 5, euro yen. Here's where we get interesting. So here's what euro yen looked like last night. Okay, we wanted to keep our focus higher while above 124.37. A breach of the high day close, which was kind of a major resistance level I was looking at, was targeting 125.81, 125.90. So our initial targets got blown out. I'm already out of that. And at this point, you're still following through. The next upside level beyond there is the upper parallel, and that's basically what we're testing right now. What can I say from here? You don't want to necessarily still jump into a long. I would love to still be long, but at this point, you have to wait for a little bit more of a setback. So the 50 line would be the first area of defense. Kind of lines up pretty nicely with those swing highs, 125.60, 125.70 region. A breach from here, you're looking for like 127.30, 127.29. Here's what the daily chart looks like, by the way. If you guys remember this setup from earlier in the month, last time we checked this out was on the 18th. And here's what it looked like back then. We had just made a false break here and an outside day reversal off the lows. And certainly that was a big, big attention shifter to the upside. All we were waiting for was a break or a breach above the monthly open, which converged on that basic slope. We finally got that back here on the 23rd, and here we are on our way. Okay, that same slope resistance is now what we're testing on the daily chart, or what we're looking just below. So fast forward from the 18th to today, and here's what it looks like on the intraday. So we're kind of testing this region right here, basically. We're gonna raise your bullish invalidation level from this point from 123.84 to 124.37. So objectively above the weekly opening range low, which is now the same median line that we just rebounded off of last week. As long as you stay above that, you want to remain constructive. Again, that's just your bullish invalidation level. That being said, near-term support and possible re-entry is still going to be at that 50 line first. 125.60, 125.70. Any questions on euro yen? Nice play. We are way in overbought territory yet, so don't, no one try to get cute and try to like get short on this thing just yet for the pullback. There's no justification for anything like that now. This is just a breakout, pure and simple right now. We're going to see if it teeters out near that trend line. Again, this is basic slope resistance on the daily chart. Questions on euro yen? Okay. Moving right along, Kiwi. So this thing, so it's maybe a little bit too early on calling this again. We've been looking for exhaustion on this, as I noted last night, guys, for like weeks now. It's, yeah, I think we're finally still getting it. I don't know if I'm being stubborn and I'm capitulating myself, or if this thing is finally stretching out. So look, you see that dotted line right there? That's basically where we caught a resistance overnight. There's a couple of different slopes that we were looking at on a closed basis. This still looked good. Even last night, you got one last stab and a real hard turnaround to the open of Asia. Kind of thought that that was maybe the onset of something. Didn't have anything on it, but I was certainly looking for a break below 72.60 here to really start the decline, to really give me some validation that, all right, we're finally going to see this thing turn. It's got like exhaustion written all across its face, but it just won't turn. And obviously the weakness that you're seeing in the dollar is propagating that. So look, you got one last stab in overnight, and here it was, went right into that trend line and pulled back. Is that it? Again, I don't want to, continually try to press this and get stopped out, but certainly looks tired again. Look at the momentum signature, unable to make new highs on that stab, although we got a fresh close high in price action, both on the 240 and even here on the 120, or excuse me, back vice versa, both on the 120 and on the 240. You're seeing that. So I'm still of the mindset, that you have some sort of correction to go. It's hard to get constructive on the dollar on a trade like this, even though you're seeing the dollar kind of just get ripped. Versus some of its other major counterparts. But at the same time, the technicals are the technicals. Resistance is resistance at the end of the day. I'm going to have to see if this finally materializes. I still think you need to see that break below 72.60, excuse me, to validate just an objective break of the weekly opening range low, and certainly that would shift the attention to the downside. Momentum has already, like I said, started to look a little heavy. So I'm hoping, I know hope is not a strategy, but I'm hoping that we get some sort of clarity here on Kiwi with the risk remaining for some sort of corrective pullback with a break below 72.60. All right. You can see that the overnight high, not only was that trend line, guys, but it was also a basic 786 retracement. I don't have it on the daily chart, but if you take it out to the 240, that's a basic 786 retracement from the decline off the highs he made for 2016 back in, what is that, September. Any questions on Kiwi dollar? And again, there's that trend line. As always, I do see a couple new names here. If you have any questions, obviously, guys, throughout the course of the session, feel free to drop them in the message board. But also, you can take a snapshot of any of the charts you see presented here by clicking on the camera button, and that way you can have them for future reference throughout the course of the trading day if you need it. All right. Making good time. Kiwi dollar. That's in the hat. We'll see if this is final exhaustion or not. Look for that breaks up 72.60. Next up, dollar CAD. Now we're getting some juicy stuff. So the dollar CAD has been one of my favorite setups. I've been in and out of this thing like no one's business, all on the short side since last week. Here's what dollar CAD looks like now. Oop. And here's what dollar CAD looked like earlier in the week. So we went over this in yesterday's webinar on Daily FX. For those of you who joined us, again, the basic focus was still for a turnaround against 133.35 last week. We got that. Weaker than expected CPI data gave you a nice pop and an opportunity to get back on the short side on Friday. I was talking to you guys about this in the webinar yesterday. I did inevitably clear out of the rest of the short side. I jumped in again and I got out again. And here we are breaking lower. So I might have jumped the gun on the exit for the second one, but you're basically still looking, the game plan hasn't changed. You're basically still looking for that dump into 31.40, 31.60. 100% extension from the decline off the highs, 764 retracement from the ascent off the lows, and again, some major slope, as you can see here on the daily chart, comes in just ahead from the June lows. It's that purple line. So sort of a big region that has already produced a little bit of a bounce. That would be the next downside target. And on the near-term slope, converges on the median line, basically into Thursday. You can go ahead and reduce our bearish invalidation level. At this point, I'm comfortable dropping that to 133 from 133.35 just to account for slope and time. And this would also necessitate a objective break, guys, of the weekly opening range highs. So as long as we stay sub 133, you're still looking for that possible drop lower towards that 31.40, 31.60 region. Here's what the 120 looks like. I kind of don't like how we're not really getting, some clear objective break of that channel support. So I'm not really basing the bias, again, most of the break guys that we're looking at, I'm not really basing it on a break of that, more so than this blue median line formation we've been following. Really nice touches, resistance, 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 the median line, resistance, break, saw acceleration, rebound, and again, converges down here. Questions on dollar CAD? Still one of my favorite plays. I mean, it's just objectively, it's the clearest one still. So I've just been kind of looking for the rebounds to offer some nice triggers on the downside. The ATR isn't all that big yet, so you don't want to get nuts with it. And we are heading to the close of the week and month, so make sure that we always keep that in mind. Heading towards Thursday, you'll see liquidity start to thin out, and you'll see things start to get a little bit wacky, out of whack. So keep that powder dry as we get towards the close of June trade. All right, dollar CAD. Still my favorite. Aussie yen, number 8. Another ripperoo. Here's what Aussie looked like earlier in the week. So again, I was actually looking for a pullback to get long. I didn't really think I could just kind of jump into a long from here and play the upside, but certainly that's how it played out. I hope some of you caught this. It gapped lower, but it didn't quite get into support. 83.75 was sort of a nice level. Into the 83.90 level would have been a nice sort of balance. You could get some sort of long exposure on this. But the break now taking out the 84.83 level and testing last week's high, i.e. the monthly highs objectively. So you're just coming in some basic resistance. Here's what 240 looks like on Aussie yen. Okay, and again, today's close will be paramount. 84.83, if you guys remember, we were talking that we documented this reversal kind of failure break at length last week, and the pullback came right back into support. Here's the rebound. So the basic focus is if we close above 84.83, which is a big confluence region, again, 100% extension, 2 equal legs up, and a 50% retracement, right? Pretty big region of resistance. Look at this. If we close above this today, your target up here still remains true, 85.60 to 85.80. Basic median line, former swing lows, former swing highs, and the key 618 retracement of the entire decline off this year's range, excuse me. So definitely something to write home about, okay? 85.60, 85.80 for the top side here on Aussie yen. If we break these highs, you got to see if we can close above 84.83 today, but largely speaking, you want to stay constructive. Above the yearly open would have to be the level. This is still your near-term bullish invalidation level at this point. You're going to go ahead and drop it, or raise it, excuse me, to the 2017 open. All right. Clean this up. Clean this up. There you go. And you don't need that anymore. Boom. Those are the amended levels for now here on Aussie yen. Questions on Aussie yen? Going once, going twice. Euro Kiwis up next. And this thing brought a smile to my face earlier today. We've been talking about this trade for weeks. Ever since we dropped into 153.80, 153.85, this region here. So you had a 50% retracement of the entire yearly range. You had the lower median line parallel. You had the 100-day moving average. All that stuff lined up right there. It was a slow dribble, and it's been that way for weeks, okay? On building divergence, and this is something that we were talking about last week as well, how the divergence signal can last and last and last for some time before it actually produces the move. Well, guess what, guys? Today we're on pace to make an outside day key reversal off of not only major support on a close basis, but even intraday price action tagging the 200-day moving average here before whipsawing higher. You see that? It's a messy break of a decent channel. Nonetheless, this median line also converges on that formation we were looking at. There's the lower parallel. Remember, we were talking about maybe one last dump? Is too clean. Now, obviously, I didn't catch this on the lows. I'm not going to front here and try to say that I'm in that of a good of a rate. But look, I think this is finally making a nice reversal here. You're now testing initial resistance. I didn't move any of these targets from yesterday. There's the initial resistance, the 50 line. So you could see some kickback from here. You'd want to stay constructive again above 53.70, 53.85, the same level. Okay, I want to stay constructive above that. Let me snap this red line for you. And at this point, let me just drop in the retracement. If you do that, 38.2 comes in right at that previous target that we already had eyed out at 56.27, 56.17. The basic 38.2, you had the former swing lows there, and the median line for the current operative formation that we've been in converges there over basically into the U.S. Open here today. Horace said, I saw it, but I didn't want to take it. Draghi was speaking. Yeah, I mean, if I was attentive and watching this during Draghi's speech, I don't care. In fact, Horace, a lot of times these event risks, when you see these spikes and market reacts to a key level that we've been looking at, those emotional moves happening during market, I don't want to say trauma, but like event risk, a lot of times that's exactly when you want to be there. And a lot of times that's the ideal entry because it stretches into a region, it triggers a cascade of stops, and that all of a sudden just starts up a whole swath of trades that kind of just fuels the reversal. Excuse me. Now, again, it would have been hard to kind of watch this, and yeah, I agree with you, especially if you're if you haven't been doing this for a while, or if you're kind of just getting your feet wet on the intraday kind of spectrum. Yeah, it's not an easy call to do. It comes with practice and experience, but you know, the first tell would have been a 30-minute candle close reversal here. Obviously, you're way off the lows at that point. But the second tell was just an objective break of the weekly opening range high. Right? We always like to use those objective markers to help us ascertain what's happening in price. And that, again, above 54 would be the second signal of, yeah, you're seeing some sort of reversal in price. This is the highest in overbought territory that we've been in the momentum signature since, well, you got to go back quite a while. Since back here. And that was at the top of an uptrend. Every other time that we saw that, we were in the midst of the uptrend, so it tells you something. Remember, of the things that we start to look for, we'll start to look for a pullback here to find some support ahead of 40, and that will again be suggestive that we're seeing a broader shift in the momentum signature. All these things, and they've all started to line up in such a way that, you know, I think adds further fuel to not only the euro strength story, but also the Kiwi weakness story, which is better start panning out soon, or I'm liable to start marking the Kiwi dollar as the abomination as well. So let's see if we can't get some further upside here on Kiwi. Don't start chasing this just yet. Again, look for the pullback. This would be your entry. If you do break higher, again, you would need to see a pullback into that same 50 line before you start to attack it. It's worth it on these kinds of plays, guys, to wait for your entries, okay? You do not want to start buying at the highs, even on an intraday play. Any questions on Euro Kiwi? Finally giving us that turn. Horace says, thanks, hey, you're more than welcome, sir. I did buy Sterling Key, Mike, because of that spike. So you know what? I don't have Sterling Key on there, but let me put it on there. Let's see what it looks like. You sparked my interest here. Sterling Kiwi dollar. Take a quick segue, guys. Dun, dun, dun. All right, not a bad level. Building divergence. Okay, so I don't think, here's the thing with this one. Who was that? Oh, that was Sandy. So here's the thing with this one. I would just say that the signal isn't quite as clear. I do like the turn. You're having all the same hallmarks, is that you're seeing the divergence starting to build. You have some trendline support, just basic extending off the lows. But I don't think the signal is quite that clear. It doesn't mean it's not going to work, but you don't have sort of the outside day reversal, break through the weekly opening range high towards sort of hallmark things yet, right? Yet. You know, if you do break the previous day's range highs, that would be further fuel to the fire. More specifically, the Friday high. I guess this is Thursday, or that's Wednesday actually. And that's 618, 75.60. So 75, 45, 75.60. That would be the break, I think, that would kind of give you, add fuel to the fire, as it were. Does that make sense, Sandy? And really give you a little bit more of a conviction upside bias near term. But obviously the onset of it looks pretty good too. Just objectively, those markers that you look for, cover the previous day's range, take out the weekly opening range high, would add further conviction to it. Not bad though. And again, once you do that, do the same thing that we did on there on Euro key. Okay, just tack on a quick retracement of this decline and a 38.2. If that is the low, again, it's too early to tell, but if it is, 38.2 would take you even ahead of that. This is the first thing I want to highlight. This range here, 200-day moving average, 236, but yearly open would still be sort of your bigger zone. So there's room, but look to clear this region first. Hope that helps, Sandy, on pound Kiwi. All right, that's number 10. Moving right along, let's jump into some of the commodities, shall we? Gold looks like this. I was singing your praises earlier, actually, on this rebound here yesterday. You did see a pullback after the webinar again, but the bottom range of that support barrier still held at 1241, and here's the rebound. I'm still concerned that you get that last spill, and I was just reading Jamie's notes yesterday. I think he's looking at the same thing. Kind of near 1231, 1232. You still have that 200-day moving average, which tagged yesterday, but just that basic trendline support, of which you have 3 tags already. So it's not, 2 tags speculative, 3 tags confirmed. That's a little bit lower. And the momentum signature kind of failing here again at 50. I don't know. It could be basing. But I just don't have the evidence here just yet for me to get super constructive on gold prices. You could get one last flush out. Long story short, here the levels remain unchanged from what we were looking at earlier in the week. So let me just bring this up. Focal range is still 1241 into 1260, as we noted earlier in the week. So this is still sort of the main key range for me. If we get that last spill, 1231 on the daily chart we were looking at actually ends up being the 786 retracement. And again, that trendline support, kind of a real nice region. And with the same respect, if you clear 1258 to the upside, I think you're on your way back into 1270. And that's the real test of major key slope resistance. So the gold picture for me is still range bound. I mean, from this standpoint, yeah, you could probably stretch back into 1258 again, no problem. But at the end of the day, it's really this range that matters to me. It's the 1231 into 1258. That's kind of my key levels that I'm looking for gold prices. Any questions? Could get one last spill, but largely speaking, looking for support into 1231. Definitely want to see this thing hold there and see a larger rebound off that region. So Karthik, I mean, you know where I stand on it. I know you're holding along. You're saying, I'm not sure where your entry was on that. If it was from yesterday, then again, you're in the money. Just take it for what it's worth. A 1241 break, 1231 is the last area of defense, right? So if that kind of gives out, I wouldn't want to be holding long exposure. That being said, that's also a region for me I'm looking to get long. Okay, on the long side, like I said, 1260, 1258 break is where you'll see a little bit more of an acceleration to the upside if you do clear it. So that's my notes on gold. I hope that helps, Karthik. Also, Sarub wanted to take a look at silver, and then we haven't looked at the euro dollar objectively, so we'll take a look at that. So silver will be number 12. 1245, 1241 is still the range to keep in mind. So near term, that's your support, Karthik. Yeah, near term, that's still support. And you can see, I mean, objectively, you don't need me to tell you that. You can see objectively, that's exactly where we found support yesterday. Obviously, these emotional stretches on data releases and such are going to happen, but objectively looking at price has been a pretty big pivot. Resistance, resistance, break, saw acceleration, break, saw acceleration, break, saw acceleration, support, support, acceleration, acceleration, support, support, right? Hey, Brian, good seeing the room, says, hey, Mike, do you look at dollar MEX? I haven't, but we can definitely do that. MXN. So let me add that to the list. Brian, good to see you. Let me see if I can get that in. Let me run through this. So silver looks like this. Can't say that I'm really a fan of the chart at this point. It's not too ugly. So let's just take a parallel of that slope. Pretty clean. And that puts you at slope resistance right now. Ooh, that was an exact 100% extension off the lows right here into 1631. Let's get rid of that 786. Don't need that. Take into account the new low. All right. I mean, this is what I would be looking at. I think this is for Sarub on silver. Very nice reaction to some key levels. Obviously, longer-term 786 retracement. That's from the advance off the lows for the year, or excuse me, the lows for December of last year. You also completed with that move an exact 100% extension to two equal legs off the high. Again, following suit with the same gradient of the slope we've been working with, extending off those lows, also offered a little bit more guidance there. So the reaction you're seeing is encouraging. You're waiting for a break of the weekly opening range to really get this thing going. Looking at the daily chart, further highlights this major key zone that we've been watching. Yeah, you're basically looking for a rally into 17. You're basically looking for a rally into 17. So this is a larger slope that we've been watching off of kind of the earlier highs. This is just off the recent highs from here. Both of them highlighting 17 as sort of a big region. I don't like where it is lining up with this slope. That's kind of like basically looking into next week, but that's the risk to the upside. Former swing lows, 50% retrace of the decline, slope on the daily. As far as the intraday, kind of kicks it out a little bit further in time, but you're still looking at that same region. Yeah, it's way too early on that, but it would bring the slope closer. There's the 50, 17. All right, hope that helps, Sarub. Let me know if you have any specific questions here on silver beyond that. I would be looking for a break of the weekly opening range high, and I would be looking to stay constructive at this point above. Let me just see. Reversal close. Yeah, I would say the close low for the month. $16.42. And that kind of highlights key support right there into the lower parallels. That'd be your bullish invalidation level. All right, Sarub. Hope that helps. All right, that is silver. Let's segue real quick. Number 13, we skipped over the euro dollar, and then we'll go over in dollar peso. It looks like there's a lot of interest in that, actually. Karthik wants to take a look at it as well. I know, guys, Jamie's follows that those exotics a little bit more than I do, but we'll definitely take a look. I got no problem doing that. Let's euro. Here we go. Ripperoo. So our suspicion of staying constructive above 111.28, I guess, kind of speaks for itself. It's been no looking back ever since, right? This was sort of an area sweetheart deal for a possible entry on the long side that we noted yesterday. But at the end of the day, there's the break. 112.32 was the breakout zone that we talked about. Once that gave way, here we are, 112.85 yet again. 1618 key resistance, the monthly opening range highs and near-term resistance here for euro. A break through this, there's nothing till 1340, guys. And that's a basic 786 retracement. 1396 would be another area of former swing highs from August of 2016. And slope resistance. This is just a basic parallel extending off the highs. That takes it a little bit higher, just sub 14. So first things first, you're at resistance. You're at the monthly opening range highs. You need to see a break through this region to really fuel the next upside leg. The question becomes where's support and possible entries if you're not already long? And to answer that question is the tricky part here. So let me take a quick look. By the way, here's what the euro looked like earlier in the week. This is last week, was last euro dollar update. There's 1285, or excuse me, there's 1128. 1285 was obviously the breakout levels. 1232 was the note of the break that we needed to see to really fuel the next upside break. And once we got that break, you saw acceleration. And I just wanted to highlight this, guys, because we always talk about these trigger points and these key levels that when they break, you want to see the market do something. I don't want to see it meander through. I want to see either reject and just completely fall apart, or I want to see acceleration. And in the point of 1232, it ended up being a really nice acceleration point. Again, necessitated a break of the upper parallel. Kind of gives you validation. So there's 1285. Look for some exhaustion here near term. I wouldn't be entering new, fresh long exposure. If you're holding longs, I wouldn't be dumping them either. You're still in overbought territory. Remember, that's when the market has the most upside fuel. And like I said, a breach here, 1343 would be my next objective topside target. On the pullback, former opening range highs for the week become support. And I'm looking for structure. $12.32 comes back into focus. And we can probably dump this at this point. Let me just clean this chart up for you guys a little bit. Bear with me. I just want to see what this looks like. Okay. Could be a little bit better of a slope on account. Oh, well, that kind of changes things, doesn't it? If you use the low from the 22nd as opposed to the low on the 20th, you can see some pretty nice touch points, and that further highlights 1285 near term. So I'd be even more cautious at this point about trying to chase the long side. If I am holding longs, which I'm not, unfortunately, I would be taking some off the table right here. Bringing your stops to break even or better, and looking to stay constructive while above 1232. That same marker actually lines up very nicely with the median line. So let's go ahead and clean that up. And again, a breach, you're looking for these topside targets. So this is the game plan here for Euro. I do think you're at risk near term. Heading into the U.S. Open, just below 112.85 to 12.86. As long as you hold that, watch out for a near-term kickback. But you want to stay constructive above 12.32. And again, topside break target's pretty clear. Any questions on euro dollar? Going once, going twice. That's number 13. We are flying. Pound Oz. I think that was number. It's number 14. Silver we got. For Commonwealth, dollar peso. Everyone wants to look at dollar peso. Ooh, oil, Sarub. Yeah, I can't leave without moving on oil. So look really quick because this is making headlines. We are running towards the last couple of minutes here. And I will look at peso, I promise. But let me just show you this. You have crude inventories on tap tomorrow, okay? And again, how do I say this without being a jerk? Look, we were looking at this trend line earlier in the week and on a Monday webinar, and we talked about the fact that it was low. We didn't want to sort of call the low because you never want to be that guy, but at the end of the day, it's pretty darn clean. It's pretty darn clean. As opposed to where gold, I think you still could see a low. I kind of just like where this bottom. November low, near-term channel support was right there. That long-term trend line that we looked at yesterday in the webinar from the weekly charts. So the long and short of it is this. You're at initial resistance, okay? Period. End of conversation, exclamation point. Basic channel resistance, the 1, 2, 3 touch, you're there. 38.2 retracement, nice pivot in price. That takes you into into 44.93, basically the 44 handle. A breach there, you got a nice rally to $1.20 up into 45.20. 45.19, former swing lows and the exact median line for the current operative pitch we've been working with. Really nice pivots, right? Really nice pivots. And that converges right there in that swing low. So the levels are pretty nice. A 38.2 still wouldn't even take you. A basic 38.2 would still take you as high as 45.80. But first things first, you got to get through this. And this is the 38.2 of the ascent, guys, not the decline. Any questions on crude prices? Like I said, you had inventories tomorrow. Ultimately, if it dumps and if this resistance holds, the levels we talked about yesterday still hold true. If you see a break in the November low at $42, you still got like another $1.50 drop, maybe into this zone down here. Big region. So the levels are pretty clear if you break the lows, but as it stands right now, if this is going to be a larger recovery off that long-term slope, this would be the break you need. You're not out of the woods yet, and that's the 44 handle. All right, so Sarub, Conwall, whoever's looking at this crude trade, before we call the reversal, and this is why we look for evidence and price action to really validate those kinds of calls. You'd need to see a break here back above 44 to really get it going. Yes, and it's last month's low. Yeah, Sandy, that's exactly what we have highlighted right here. So big region. Watch resistance upcoming here on crude into the open of U.S. trade. Peso, I'm not going to leave without taking this. I haven't looked at it just as a disclaimer, so as I bring it up, the chart's probably going to be pretty ugly, but let's see what it looks like. No, it's not that bad. Okay, so right off the bat, you're looking at some divergence into the lows. Let me see what the daily chart looks like. Also some strong divergence. I wouldn't call it strong divergence, but it's there. Yeah, so I think we talked about this briefly yesterday. I can't get excited about it unless it gets back above 18. Um, I do like that this slope is still actually producing. Hmm. Hmm. Okay. And that former swing low actually comes in at 1586, and that converges both on the upper slope and that new median line. Again, this is way too early. You have no clue if this is actually in play. But you try to get in with some structure as early as you can to give yourself guidance. And then if the market starts reacting to it, that's when you start to operate on it. But that would be the first place I'd start to look for a little bit more of a conviction rebound, either a break to validate some sort of breach and break out of the larger descending pattern, um, or some sort of definitive price action. But ultimately, yeah, I'm looking for a break above 18 to validate some sort of reversal here in peso. Now, that's not to say because we're super bullish the dollar, as much as to say that just near-term price action is coming off support on divergence. So you're in the downtrend until you're not. The immediate focus for me is probably on this recovery here towards 18, towards 1815, 1586 being sort of major resistance. But that would be the level that, if broken, would certainly shift my broader focus here to the upside for peso. Does that make sense, guys? For those of you looking at pace, um, that's sort of the near-term focus I'd be looking at as it stands right now, sort of these two targets. Karthik says, yep. Is it good trading dollar peso, Michael? I've never even had a look. So Sandy, I've only taken a handful of trades, to be quite honest with you guys, in peso over my career. I'm not really a big trader on these pairs that have a little larger both spread, just because I'm so in and out more so often that I try to keep it a little bit more towards something that's super liquid. But yeah, the interest is definitely there. I can tell you, Sandy, just from our side of the analysis side, um, there's a lot of interest in the peso, and they tend to be leading indicators a lot of times for dollar price action movements. Karthik says, I'm also figuring that out. Yeah, oil dependent and seasonally a strong week. Just waiting to time it, says Brian. Thanks. Hey, you're more than welcome, Brian. Cheers, mate. Guys, we're going to go ahead and wrap it up there. We'll be back tomorrow morning, obviously at 8:30 Eastern with another session. Bring your questions. Hopefully we'll get a little bit more play. Again, I want to caution you guys, keep it nimble, okay, this week. It's a good time to just make sure that we're being a little bit more meticulous with our entries and exits as we close out the month. Karthik says, thanks for the wonderful session as usual. Hey, same to you, Karthik. We'll see you guys all tomorrow morning. Best of luck trading. Cheers.